Hey traders, Jonathan here at Forex.com. Today's video is an educational lesson on trend trading. I've been getting a lot of questions about trend trading and a lot of confusion surrounds on how traders can trade not only within trends but also within ranges. A lot of the market recently has been ranging and also a lot of sideways action, and a lot of traders have been getting caught up and looking to identify trends when trends haven't been there. This chart is a daily Euro US dollar. The first point I want to touch on is the first mistake a lot of traders make is looking to play trends when they're not there. A lot of traders are looking to identify trends on every market or every pair. What I mean by that is every chart they flick to, they look to identify a trend when they're not there. Okay, so this Euro US dollar chart, there's a clear leg down. Okay, that's recent momentum, but it's not a trend. If we look to the recent left to right, we see clear sideways action. Okay, so we see prices clearly move left to right. There's no higher lows, higher highs. There's no clear trend from left to right, either direction. Okay, there's no clear trend. There's just sideways action. It's a clear range, and this is what we're seeing in a lot of pairs. If I flick through a few of my charts, we're seeing this on most charts in the Forex market at the moment. This is a GBP US dollar. It's the same thing. We're seeing a lot of sideways action on most pairs. Okay. Flick to the US dollar, Japanese yen, and this market was in. This was in a roaring. This was in a roaring uptrend, but now we've gone into same thing in the last few weeks. Month or so, we've gone into sideways action. Okay, so getting back to that original point, not every market is in a trend, and actually more often than not, the Forex market is ranging and it's moving sideways. So the best thing you can do is learn to play these ranges. Okay, learn the best methods to play these ranges, because the majority of time price is in sideways action and price is caught in these box situations. Okay, these are the trickiest markets to play, but if you can't play them, and if you don't know how to play them, you're going to get caught. You do need to know the techniques and the best way to play these range trading. However, as we do know, the easiest markets to play are the trend trading, and the best edge a trade can have is trading with the trend. Okay. And getting back to trend trading, if we move back to the first chart, there are still markets and there are still pairs that are trading trend trading. So if you are a novice trader, or you're just beginning, or even for those traders that just only want to trend trade, you can do it. You just have to be selective. Okay, so when you see these pairs that are sideways trading, you just have to be disciplined, and you just have to say, I'm not going to trade the markets that are in sideways action. Okay, you just have to be selective and say, I'm only going to trade the pairs that are showing clear left to right. They're moving high highs, high lows, or lower lows and lower highs. Okay, so it can be done. You just have to be selective. The next question I get asked all the time is, how far back should traders be looking, and at which trend should they be looking to trade? Should they be looking for the short-term swings and the short-term trend, or should they be zooming their chart right out and looking for the long-term trend? And the answer to that question depends on which method or system you are using. Okay, if you are using price action and using our Forex School Online method and price action, you need to be getting on the short-term method and the short-term swing. You need to be getting on the next move. You need to be getting on the next swing. The reason you don't want to be getting on the long-term trend is because it's a waste of time. Let me explain. Okay, what people often do is they zoom their charts out like this. Okay, and they look for the long-term trend, for example, like this. Okay, if you're looking to take large chunks out of the market, for example, like this, you're looking to take a large swing like this out of the market, you need to be prepared. This is a daily chart, the Euro US dollar. You need to be prepared to sit in the market for 3 to 6 months, to place 500 to 1,000 pip stops, and ride all of this out, okay? So if you're looking at these sort of trends, that's fine. You can do that. That's fine. If that's your method, that's fine. And they're the sort of trends, these longest term trends you'll be looking at. But that's a completely different type of method. We're not looking at these longer term trends, okay? We're not looking at these really long term trends because we're looking at 4, 5, 6 days, 2, 3, 4, 5, 6 days. We're not looking at 3, 4, 5, 6 months, and that's why we're not looking at these really long term trends and moves, and we're not looking at 5, 6, 700 pip stops on the daily chart, even out to 1,000 or more pips. Okay, we're looking at the next swing. We need to be getting on the next swing. Okay, for example, you see this key level and this pin bar here. Okay, we need to be getting on the next move. Okay, so the next key level is here. We are getting on the next move into the next key level, so the next swing down, so the next 3 days. So we need to be getting on the next trend. So we need to be on the next trend's move. We're not looking for the next month, 2, 3, 4, 5 monthly swing. We're on the next 2, 3, 4, 5 days. So this is why the trend is so important and why it can be such a big edge. So if we have a 2, 3, 4, 5 day swing this way, a swing, a swing, a swing, this is why it can be so important, especially for newer traders, and they can put such a big edge in their favour by trading these obvious trends and just getting back in obvious logical pullbacks. This can put such a big edge in their favour. The next important point that traders often get stuck with and often get caught out is looking to higher time frame trends. They'll like moving to a weekly chart to look to a weekly charts trend, and then trading that trend on a daily or 4-hour chart. It just simply doesn't work. Okay, so for example, going to the weekly chart here, looking for the weekly chart, whatever it is on this chart, and then using that trend on the 4-hour or daily chart. It's a big no-no. Don't do it. There is so many different trends that could happen on the 4-hour chart before one candle has it even formed on the weekly chart. You need to treat each candle on each time frame independently. Just before I finish this tutorial, I just want to finish off with the gold chart, just as one last example of how you can get into obvious trades and logical trades. This didn't end up happening, but it's just an easy example of how you can use this method, and especially the newer guys, to get into trades. As we spoke about earlier in the video, this was moving down. I didn't end up getting into this trade because the price action didn't form out, but it's just an obvious example how you can use this method. Okay, now when we spot an obvious trend, we don't just spot the obvious trend and then set an order and get in. We need a few more things. We need a logical level, and then we need price action to confirm. Now, once we spot the logical level and we spot the price action, we spot the trend, we can use other time frames. Okay, so this is the daily chart of gold. Okay, so if I zoom in, you'll notice that we had price was moving down and we had this bullish rejection candle. This was showing support. Okay, so price moved down, showed support, bounced higher before bouncing through. So if I clean that up, and I'll put a support line there. Okay, so this is where price had found support. So we moved through, we've got the downtrend in place, price found support, bounced higher, and it broke back through. Okay, so this is a support line, so we moved the support through. So we've got the support line through there. Now at this level, once we knew price had broken through, we knew this level may hold as a new resistance, and this is where we could target as a trade on either the daily chart like we have, or this is also where we could start looking on the 8-hour chart, the 12-hour chart, the 4-hour chart for trades to get short. Okay, now as it happened, price formed a bearish rejection candle on the daily chart. Now I saw this, but it just wasn't big enough, or it's a not quite pin bar. It's just, I did see it, but it's just not big enough for me to take a trade. Okay, so it's this small bearish rejection candle. I just wanted to bring it up to show you a logical example how next time when you see this pattern form, you can look for it, and you know how to look for this same pattern. This is a very high probability pattern to work out. You'll target the lows, target the lows, and it's a very high probability pattern. It's with the trend, and it forms in the Forex market time and time and time again. I hope you've enjoyed this video, and if you want to learn anything more about price action, anything at all, just jump on over to forexschoolonline.com. I look forward to talking to you soon.